Ladies and gentlemen, good day and welcome to the Q3FY22 Earnings Conference Call of Rushil Decor Limited, hosted by Asian Markets Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Batelia from Asian Markets Securities. Thank you, and over to you, sir.
Thanks, Stephen. Good afternoon, and welcome all to the Rushil Decor Q3 and 9 months FY22 earnings conference call hosted by Asian Markets Securities Limited. From the management side, today we have with us Mr. Rupesh Thakur, Chairman and Managing Director, Mr. Keyur Gajjar, CEO, and Mr. Vipul Bhai, CFO. I now hand the conference to Mr. Rupesh Bhai for his opening remarks, post which we shall open the floor for question and answer. Over to you, Rupesh Bhai. Thank you.
Good evening, everyone. Wish you all very warm welcome to Rushil Decor Limited earnings conference call for the third quarter year 21-22. I would like to be expressing my gratitude to all of you for taking time to join us today. On the call with me, Mr. Vipul Vara, CFO of the company, Keyur Gajjar, CEO of the company, and Bridge IR, our investor relation team. Before we discuss the performance of the quarter under the consideration, I would like to brief to take through our company. Rushil Decor was incorporated in 1993. Has been in industries over 29 years. Currently, the third generation involved in the business. The business is divided into 3 segments mainly: laminate, MDF, and PVC. We are one of the largest manufacturer of decorative laminate and third largest manufacturer of MDF. Under the laminate, we are manufacturing single-side decorative laminates, double-side decorative laminate, and industrial laminate. We have a wide range of designs, color, and finishes. We have 3 manufacturing units in Gujarat. I am happy to inform you that our MDF plant in Andhra Pradesh opening better than our desired expectation. Our utilization of the plant has been growing month-on-month basis, and we have already reached about 80% utilization level. This, I believe, quite significant and gave us enough confidence. As you know, our Chikmagalur plant was shut down for more than 54 days. And Vizag plant took care of loss of production from Karnataka by reach significant utilization level. During the Q3, we saw very limited decline in volume against the previous quarter because of our AP plant. I would like to share that we are taking steps to increase our realization and resulting better EBITDA margin. So we have grown significant year-on-year basis, but the flattest sequence performance in spite of low volume could be achieved due to higher realization earned during the quarter. Further, I would like to add that new facility brings strategic location advantage as it's set up in South India, which is one of the most prominent market and near the port of South India. We are consumer product company, and as a strategic, we are adopting various means of market. We also create brand awareness through advertisement, marketing network like dealer and distributor branch offices, etc. Currently, the company is well poised continues with current momentum. Our immediate midterm goal is to achieve desired capacity utilization at AP plant and newly upgraded Karnataka facility. I would like to request Mr. Keyur to share his initial thought with us.
Thank you, Professor. I would like to welcome everyone present on this call and thanks for your time. I would like to begin by saying that the company is in very interesting phase of growth and evolution, with the new MDF plant at AP operating in better than desired manner, and our confidence level is pretty high. The recent shutdown and delay bottlenecking at Karnataka plant would also add to it. The MDF market is well poised to grow at decent pace, and we all are ready to make our strong presence felt. Our strategy is to keep analyzing the over the market evolution and keep achieving higher capacity utilization at our new MDF AP plant. We are working on our operational metrics and trying to improve it. I would like to request our CEO, Mr. Vipul Vora, to take care of this forward. Thank you.
Thank you, Professor. Thank you, KY. I shall first take you through third quarter numbers. The top line for Q3 FY22 stood at rupees 167 crore, registering a growth of over 80% YOY as new plant in AP contributed to higher volumes. Despite a 54 days plant shutdown at Chikmagalur during the quarter, the company recorded a flattish revenue performance on a sequential basis as our AP plant operated at optimum capacity and compensated for the loss in volumes. Realizations at the same time also trended upwards. The EBITDA stood at rupees 18.96 crore in Q3 FY22, increase of 95.47% as against rupees 9.70 crore in Q3 FY21. EBITDA margin stood at 11.37% against 10.48% in the same quarter last year. The interest costs and depreciation were higher during Q3 FY22 as against Q3 FY21 on account of capex incurred on the AP plant. The net profit for Q3 FY22 is rupees 7.29 crore as compared to rupees 5.33 crore in Q3 FY21. Coming to the 9 months performance, the top line growth was over 81% over 9 month period of FY21. Our EBITDA grew by 75.83% for the same period. The 9 months of FY22 was impacted by the financials of Q1 FY22, but that is in the past. With every incremental utilization level from AP plant, the performance has been getting better and is likely to improve further. At the same time, with upgradation of Karnataka facility and commencement of operations, we are confident of seeing better days ahead. I would now request the moderator to open the floor for question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Karthik Nendirata from India Nivesh. Please go ahead.
Congrats to the management for decent performance. My question is related to the MDF realization. Our realization for Q3 22 are around 25,600. That is 21.3% increase YOY. Whereas the realization of Century and Green Panel have increased by 33% and 44% respectively. So what's the reason behind this?
Okay, hi there. This is Keyur and I would like to answer this question. Number one, we gave total 3 price increase in the month of October and November. First price increase was on 1st October, around 6 to 8%, so average 7%. Second price increase on 9th October, that is again 6%, and third price increase on 13th November, that was around 7%. So altogether it was between 70 17-18%. Now we are going to have the effect of this price increase in coming quarter. This is number one reason. Number two reason I would like to say is that if you see our Chikmagalur plant realization, it's doing pretty better. I would say we are almost like 28,500 realization per CBM in Chikmagalur plant, from the Chikmagalur plant. Because in AP plant, we have not yet started offering value-added product. So that's one of the reason why our overall realization in this quarter is comparatively low.
Okay, sir. Any numbers on the value-added product?
In Chikmagalur, we have crossed 55% value-added product. And if I give you like a December month figure, our realization of December, only specific December month, it's almost more than 30,000 rupees per CBM from Chikmagalur plant.
Okay, so just a last question. What is the mix between retail, OEM and institution?
Yes, it's around 60 to 65% is our retail segments, and 30%, 25 to 30% is OEM segments. The balance is exports. And yeah, I forgot to mention one more thing is that our OEM pricings are now at par with the retail pricings, and that is effected from 13th November. So we are also having a good effect in this quarter as well. Previously, it used to be at the discounted price.
Okay, thank you. Good luck to the management.
Thank you very much.
The next question is from the line of Krishna S. from Vihar Advisors. Please go ahead.
Yes, so good evening and thank you for the opportunity. And actually, I have been tracking your company for some time now, and I'm very happy that you are walking on the path which you had envisioned. So congratulations to the management for making it happen. And the first question is with respect to other income. So other income you have shown 2.67. So I would like to know what is the components of the other income. And yeah.
See, other income is because of the dollar being changed. Okay, it's a foreign fluctuation cost.
Okay, so that is because of foreign currency fluctuation, right?
Yeah. That is why the figure so it seems to be as compared to other quarter little higher.
Okay. And secondly, on the raw material cost. So raw material cost, are you seeing in the current, even in the quarter gone by as well as in current days? So are you seeing any significant price increase in the raw material cost?
So raw material cost was increased in the last quarter very high, and now it is stable. So in near future, I am not seeing any very high increase in the raw material price. If it will be increased, then we have to pass on the customer. So we do not have any choice.
Okay. Fine. And next is that this AP plant. So now that you have achieved probably because Chikmagalur was closed, so you got an opportunity to actually step up the production. So now with the higher production, say 80% occupancy of both the plants is what you would be targeting, or it would be higher or lower than that?
Yeah, it's going to be the more or less 75 to 80% from the both plants.
From both plants. And the demand scenario, is it like it can take this kind of turnover increase of it can take the volumes?
Yeah, definitely, because there are two reasons. Number one reason is import is not at all there. If I give you the data of Vietnam MDF import, it's only 1,824 CBM in this 9 months, which is very low. Previously, it used to be like more than 1 lakh plus. Number one. Number two, there is a huge demand for the MDF segments. And if we see the CAGR is around 15 to 20%. So we don't see any issues with the demand at present.
Okay. So probably that is happening because of the plywood substitution kind of thing as well as the real estate market.
Definitely. If I say Indian real estate business, people are, if you see 50% of all the corporate buildings and offices, these are now, they are using the furniture made with the MDF and particle board.
Correct.
Then now the second segment is coming up, that is a value-added product like high-density fiberboard with water resistance capacity. Now this segment is entering into the kitchen segment as well.
Correct.
So demand is increasing day by day. And a lot of OEM startups for furniture, kitchen, and all these customers are there. If you see the company, they produce bed, company they produce kitchen. So we see a tremendous potential.
Correct. So actually, so that is you are at a very interesting juncture, as you rightly said, that at this you are poised for excellent growth. But now that comes to the next question, which is like, so for example, are you planning any further capex on the MDF capacity front? Because it would make sense, or if at all you are planning, then when it would be? Because how much time does it take from, say, concept to action? Like, because for example, if you probably think today, then probably your plant would be up by, say, another 2-3 years. So if you are planning for that capex, then you would have to start thinking today. So is there any thought process on that?
See, right now we have only one thing, this AP plant being created. We would like to have it being stabilized and producing to the extent of our expectation. And thereafter, see, every 3-4 years we can think of new things. But right now there is nothing that we are deciding on this capex idea.
And yes, I would like to add one more thing. That we are using a German technology, very sophisticated plant, and we can always achieve over capacity like 110%, 115%. So with the current CAGR and all, I think we'll be fine with that.
And your debt, with respect to the debt, so you would like to go with the obligations, like as and when it falls due, you would like to pay, or you would like to prepay, or something like that, or because the interest rates are in a down, like right now down. So, like, what is your thoughts on that?
See, right now also we are paying very low interest as far as this capex of the new plant is concerned. You will be surprised to know that the interest on the German loan is 0.85% per annum. So question of repaying it right now, if it is a financial decision, I will not be in a position to, I will not decide to repay. I will continue with it and I will repay from my regular inflow, cash inflow. So I don't think that there is any sense in giving it back as compared to the Indian local interest of about 8% right now.
So next question is that, see, basically you are into two major segments. One is the MDF, so which is excellent. You are doing excellent in that. So next is your the laminate part. So why is it that we are not focusing for, say, capacity addition in or boosting the sales in laminates part? Is there any strategic reason for that, or or we would like to go and grow that segment also for the PVC?
No, at present, to be honest, entire focus is because of this COVID 2 years. So our entire focus was on AP plant. We wanted to put this plant on run with our expected capacity. So that's one of the reasons why we have not given a thought on laminate business. However, certain internal discussions are going on, but on time we will discuss.
Okay, fine, good. So that's all from my side. So thank you once again. Hearty congratulations for putting the plan on track, and good luck for the future.
Thank you very much. Really appreciate it.
Thank you. The next question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good evening, and congratulations on the ramp-ups and strong numbers. What I want to understand is on the MDF side, do you see any competition built-up happening in from, when the container situation improves globally and influx from China? Would that be a threat, in terms of realization and profitability for domestic players?
To be honest, we really don't see the freight movement will come down in coming months, because this is number one. Number two, they can go for 4-5 containers, but if you want to import MDF, you need substantial inventory like 100 containers, 200 containers, and it's very difficult to get now.
Okay.
So we don't see that part in near future, I believe. That's my personal assumption. And second thing, China is not ever not a threat for us because of their freight cost. Previously also, before COVID also.
Okay.
And we have some other competitors located in Southeast Asia. But if we see furniture market in general, there Vietnam, for example, there is a tremendous local demand for exporting the MDF and furniture to US market.
Okay.
And some of the interest where they don't really want to sell their marginal production to India or Gulf countries.
Okay. And great. So, and second question, could you share any sense on the segmental margins? How are your MDF EBITDA margins? Your realization is improving, your utilization is also picking up. So, could you give some sense on EBITDA margin for the three segments? Or
see, MDF realizations have increased. If you look at the comparison from quarter on quarter, right now realizations are higher. And yet we look at the further incremental realizations, the way in which the mixes are being changed. So it's about to be appreciated. And EBITDA level as such in MDF it has increased. And in the time to come, as compared to the two plants combination, Chikmagalur and Andhra KP, because of the value-added products, that also will increase the EBITDA.
So this 11.5% EBITDA margin on total basis, how would the margins would be across the laminates and the MDF?
11.5 is a combo.
Combo, right. That's what I'm saying.
The question is that what I'm trying to analyzing. If you look at my Chikmagalur plant, I have 40-45% of the plain board and then the prelam board selling, whereby the contribution is high, realization is high. So the same way we'll apply same philosophy at AP also when value-added products are being sold. Naturally, EBITDA will go up.
Correct.
And one more thing I would like to add is the Chikmagalur plant was closed for almost 54 days. And that's one of the reasons why if you see our combination of EBITDA margin, it's not very perfect. But if you see individual plant-wise, if you see only AP EBITDA, then it is pretty good. And I think it's around 22%.
Yeah.
Okay, so MDF on a normalized basis, we can see a 22% EBITDA margin. This quarter, I understand, would be impacted because of the shutdown and all.
Exactly.
Okay, and for the laminates, sir, what would be the EBITDA margin on a normal steady margins that you are looking at, maybe last 3-4 quarter average?
Right now it is about 5%.
Okay.
Because of the situation is that the last quarter, RMC, raw material prices have gone up.
Right. So but pre-COVID, what were the margins?
5% is also very high.
I would like to tell you that, we are talking about the current, Q3 EBITDA and all these things. Specifically, Q3 is the, quarter where we have a lot of festive seasons.
Okay.
So our sales in laminate is comparatively low in this region. In this
quarter,
October and November is always like this. So that's one of the reasons why, laminate. And if we see laminate industry in general, I believe the CAGR is almost 13 to 14% for coming 5 years. So we see a lot of opportunities in laminate business in coming years. If we talk about the realization of our export business, because of this domestic festive season, this EBITDA margin is affected probably. But if you see our export realization, it is almost grown by 10% in this quarter.
Okay. No, I just wanted to understand, like on a steady basis, we leave this quarterly impact. what could be the margins for the laminate business for you? And the MDF you said would be 22 odd %. So similarly for the laminate, what sort of EBITDA margin one should understand?
In normal circumstances, laminate business, per se, if you look at the industry, EBITDA is in and around 10%.
Okay. Okay. In a normal scenario, 10% is doable.
Yeah.
Okay.
So that is the tendency. If you look at all the peers also, these will be laminate particularly. It's a low profitability item.
Mm-hmm. Okay. So like that is a EBIT margin you are talking about, sir, or EBITDA margin? Because EBIT margin, you're right, laminates you have been reporting 10 to 12% EBIT margin.
EBITDA only. I'm talking of EBITDA.
Okay. Great, sir. I'll come back in queue. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Ayush Agarwal from Mittal Analytics. Please go ahead.
Good afternoon, Mr. Ayush.
So first question is if you can tell us about the volume numbers from our Vizag plant in this quarter.
Pardon?
Sir, sales volume number from the Vizag plant in this quarter.
See, we have produced around 40,000 plus CBM.
Mm-hmm.
And if we combine the exports and domestic sales, it's around 37,000 sales. I'm talking about sales value, sales volume. And production is around 40,000 plus.
Oh, that's lovely, sir. My next question is on
This is only from our AP plant, huh?
Correct. Yeah. Sir, my next question is on our higher value products in the AP plant. So, I think a couple of quarters back you had mentioned that we were facing issues with engineers coming from Germany. So what are we doing about that, and how do we see, churning out more higher value products from the AP plant?
See, that is a now historical thing. It has happened in the past. Mm-hmm. Thereafter, they have operated these machines sitting there in Germany. So there is no question that now the engineers have to visit or something like that. That announcement was required to be done statutorily. We had done it. Mm-hmm. And now everything, plant is running at this capacity.
Mr. Ayush, producing value-added product will not be a problem as long as this plant and its technical part is concerned. We are fully equipped with the machineries for like delaminations and all these grades. Now, there are some other value-added products like exterior grade, high-density fiberboard with water resistance capacity. It's just a matter of technology, that's all. And we are already currently producing at our Chikmagalur plant, so that's not a problem for us. And we were actually focusing on achieving the capacities and efficiency of the plant. And that's one of the reasons why we were producing this interior grade. And now we are ready to launch all our other products.
Right. So beginning Q4, we can expect a share of higher value products to increase.
Yes, we have already launched. So slowly, gradually, we'll gear up in Q4.
Right. Understood. And so my final question is on the laminates part. We used to do more.
Repeat, please. Can you repeat, sir?
Sir, my last question is on the laminate side. Looking at the presentation, we used to do more than, you report in numerical figures, so we used to do more than 8 lakh numbers of laminates previously, but that has gone down below 10 lakh. So can you explain, like, are we facing some headwind, or are we doing something else that is why we are not able to produce or sell so much of laminates that we used to earlier?
No, that's not only the reason. As I said in my earlier answer, the reason is mainly festive season in the month of October and November. Mm-hmm. That's one of the reasons why we were not able to. Otherwise, if you see our last quarter, we were almost like 742,000 sheets. So, right. So that's only purely because of this festive seasons and all these reasons.
All right.
And sir, one last question, if I can squeeze in, is
Mr. Agarwal, sorry to interrupt. Your voice is breaking up, sir.
Is this better?
You will have to repeat this question. Can you please?
Yeah. Yeah, sir, is my voice better now? Am I audible?
Very much.
Yeah, thank you. So my last question is that you had mentioned that, the Chikmagalur MDF realization is well above 28,000, which is very healthy. So do we plan to, do 24,000-25,000 in AP as well in Q4?
Could be. Yeah, that's possible. I mean, it's not a problem.
All right. That's it from my side, sir. Thank you.
Okay. Thank you.
Yeah.
Thank you. The next question is from the line of Pranav Gala from iWealth Management. Please go ahead.
Hello. Am I audible?
Yes.
Thank you for the opportunity, sir. Great set of numbers. Sir, just wanted to understand on our EBITDA margin side of it, sir. So for other companies, we have seen that the EBITDA margin for the current quarter had grown. So just wanted to understand where we missed out on.
See, if we compare with the other companies for now, their realization, our realization is different. What we have done is, Chikmagalur plant was closed for 54 days. There was no 54 days production. And AP, as we are just initiated the process there of producing, yet value addition things have not come up there. See, if you look at the peer sale measure, these value-added products are more in the cell component. The moment we also will have value-added products, automatically our EBITDA also will go up.
Okay. But sir, even then we had a healthy realization growth. So, like on volume terms, quarter on quarter, we saw 13% decline. But if on the same on the realization side, saw 14% increase. So again, sir, we saw healthy realization growth, and still there was a little gap when it comes to the EBITDA margin side of it, sir.
Yeah, because you said there was a minus EBITDA margin in Chikmagalur. And if we see our production loss, it's almost like 54 days, so we can consider around 2 months. So there was a more than 30, I guess, crore revenue loss if we compare with our existing realization.
Sorry, sir, could you repeat what was the loss of revenue?
I would say if we consider current rate of realization, then we believe that it is more than 30 crore.
30 crore?
Yes, 30 crore.
Okay, sir.
And that's one of the reasons why, our EBITDA affected from Chikmagalur business. Otherwise, if we see a AP plant, it's pretty good. And we expect a lot.
Right, sir. Yeah, like you mentioned in your presentation as well, sir, we have reached the 80% utilization. So just one bookkeeping question. So what was the sales that we had in the new plant? As you mentioned, 37,000 crore was the sale volume. 37,000 was the sales volume. And what was the sales in terms of value?
Value-wise, 137 crore, 1 crore 13 lakh.
Sorry, sir?
113 lakh. 113 crore.
113 crore.
Yeah.
Okay, sir. Thank you so much.
Okay. Thank you, Pranav.
Thank you. The next question is from the line of Yash Agarwal from JM Financial. Please go ahead.
Yeah. So I just wanted to check, again, in December month, what is the realization from the AP plant? I think you gave it for the other plant, about 30,000. So what is the same figure for the AP plant?
See, good evening, Mr. Yash. And if I talk about overall AP plant realization, it was 22,818 rupees. Okay. And out of which domestic realization was 23,174 and export was 19,714.
And this would move up, right? Because you've taken 3 price.
It's already moved 15% compared to last quarter. And as I said before, that we implemented price increase in the month of October and November. So I believe it's going to be, and then we are also planning for product mix like value-added products and all.
So this could move up another 5-10%, right? The realization number that you spoke about?
Maybe.
Yeah. Also, I just wanted to check, so what sort of capacity utilization for both the plants are you looking at in FY23? I think you're running at 80% now. So if the demand stays good and, if there is no import risk, could we achieve the 100% utilization mark in FY23? What's your target?
See, practically, 100% is not possible. I tell you, the technical part is like, if we produce 2 MDF, our plant runs at 500 CPM per day. And if we produce 16 or 17 the commodity type of product, then our plant runs at 800 CPM. However, we are targeting that we'll try for 75% of the combinations.
That's the next financial year?
Yeah.
Got it. Okay, thank you.
Thank you.
Thank you. This is from the line of Agastya Dave from CAO Capital. Please go ahead.
Hello, am I audible?
Yes, very much.
Thank you for the opportunity, sir, and very good commentary. It's really nice to hear all the progress that you're making. Sir, I need just some few clarifications on the statements that you've given. One is, sir, I am not sure, can we see, let's say 50% value-added share in the AP plant? Did you give any timeline? Because I lost you in between.
Hi. Good evening. We are starting this part very aggressively. Till date, our value-added products were widely spreaded in southern region.
Right.
Now we are, moving ahead with other regions like Central India, North India, East India, and all this part.
Right.
And possibly by next financial year, we'll be able to achieve this mix because we are more interested for value addition products, and I believe any company.
Right.
So that's one of our target to reach 50% value-added product as early as possible. And Indian market is growing also at that speed.
So what can we see in terms of the trend in increase of value-added share from the AV plant? Will it be like very, very quickly? Because as you said, you have the machinery in place now. You already are doing the same thing in the old plant. You clearly have the capability and there is clearly a demand. So can we expect like in Q1 itself, will we see 30-40% share or will it be more gradual? I'm not very sure about that. How will you see that?
Actually, we are working on our target setting process for Q1. So it's very difficult to say at this point of time. But yeah, we want to achieve maximum capacity for the value-added product.
Sure, sir. The second clarification was on the debt side, you gave an interest cost number for the foreign debt. Can you please repeat that? And second, on this foreign debt, do you hedge it in any way? Any portion of it, is it hedged or you keep it completely open? And do we expect our exports to kind of give us natural hedge? Itna export hum karenge, sir?
Yeah. See, right now also we have exports of about 130 crore up this year.
Okay.
I'm talking of INR. I'm not talking in terms of dollar. See,
right.
Every month there is a surplus dollar flow, which is ranging from 6 lakhs to 8 lakhs dollar.
Okay.
And my repayment is not exceeding even $1 million.
Okay.
So the thing is that if a quarter, if I'm having $1.8 million surplus, export receivable minus import.
Got it, sir.
That will be 6 lakhs minimum per month.
Right.
So natural hedge is there.
Right.
As natural hedge is there, there is no hedging being done on these forex borrowing.
Sir, you said $1 million repayment is on a quarterly basis.
Yeah. No. $1 million, even if it is payable. Quarterly basis, I will have to pay at least more than that amount. But the thing is that no, my repayment total is being covered by my export receivable surplus.
Acha. Okay, I got it, sir. You have like enough natural hedge for it not to be a risk. So final question. You mentioned in the call that आपका domestic realization and your average realization from AP plant were 23,000 plus in domestic.
Yeah.
And average was 22,818.
Okay.
And then you mentioned that there is a 15% increase. So as of now, as of today, what would be the price that you are getting in the market? And what kind of discounts do you have with respect to other players? Can we catch up to that? And finally, do you see any further price increases in MDF going forward? Because you also mentioned that while freight is a problem, logistics is a problem, and imports are not coming, but raw material escalation has kind of stabilized. So what is your view there? So that is my last question.
For raw material, if there is a price increase from raw material side, as Mr. Kupesh said, we might have to pass on to the market.
Okay.
Number one. Number two, as long as realization is concerned, realizations are pretty good, and we don't see any downward. As on that, it's pretty good.
Right.
And for OEM also, we are doing pretty. From 13th November onwards, we have that price as per the retail market only.
Okay. 13th November onward. So, sir, based on the average that we realized last quarter, this quarter, how much higher we are?
Well, it's very difficult to say at this point of time, but we believe that, the first price increase took place in October and second in November. So, total price increase effects has not taken place so far, number one. Okay. And number two, Chikmagalur plant was not operational in that 3 months. 54 days it was shut down.
Right, sir.
So it's very difficult to predict, but realization has to be higher, I believe.
Excellent, sir. All the best, sir. Thank you very much for holding the call and giving me the opportunity to ask you questions.
Thank you very much. Thank you. Really appreciate it.
Thank you. The next question is from the line of Vijay Sarda from VL Investments. Please go ahead.
Hi, sir. Most of my question has been answered. I just wanted to check on two fronts. One, regarding the MDF capacity, you said we can go up to 110-150% if needed. And second, I just wanted to understand if you want to produce a product of kind of Andhra Chikmagalur plant, how much time we will need to get into this mode of producing. So our plant, we already increased the capacity. So can we change the mix faster if required?
Yeah, that's easily possible. We can easily change this shift. And if we look at our pre-lamination business, we have almost I would say around 25% capacity of our existing plant. So we can convert this 25% pre-lam business immediately. And for exterior grade and HDF is not a problem. That we can.
And sir, basically, one thing is currently in terms of market positioning, if I look at competitor and ourselves, they are realizing 30,000 plus and all that. Whereas for Chikmagalur, definitely, as you said, we are realizing 28. So for Andhra to ramp up to at least 27,000, that's a clear possibility, as you mentioned. So when can we?
Sorry, but I would like to make it very simple because that time at present, if we look at AP plant, we are only producing interior grade only. Basic product.
Okay.
And that's the only reason why our realization is pretty around 24,000 or something like that.
So the last question in terms of the cost of production. So what I read is the cost of production overseas is at least 35% lesser compared to Indian cost. So how basically, as you rightly said, the freight costs currently are much higher. But once this get normalized over next 6 to 9 months or a year or so, how we will be in terms of positioning ourselves? Because if I look at the cost of most of the players, these are around 18 to 20,000 for Indian players. Whereas what we are exporting is at 20,000 realization. Even for the Century, the realization is around 21,000 green pen. So if we look at export, if we are able to export at 20, once the freight cost decrease or whatever, will we see dumping of the MDF in the domestic market? And even if it was happening earlier, what is the price, normalized price, not at the increased price they were importing the MDF?
Look, if we talk about the total furniture market worldwide, it's around furniture market I'm talking. It's around 100 billion.
Okay.
And out of which China contributes a lot, and then probably Vietnam and Germany.
Vietnam and Germany. Okay.
Now there is a huge demand for furniture from Vietnam business, from Vietnam producers.
Okay.
From this around the globe, I believe. And that's one of the reasons why there is a lot of demand of MDF in Vietnam itself.
Okay.
Then there are a lot of demand itself in Thailand and other part of the world. So we believe that dumping will not be very much in coming months, even if there is a freight changes. And it's it's not at all predictable what will be the freight after 6 months or 1 year.
That is no one. Everyone's guess. Yes.
We are more than in 2 years. We have one wave, second wave, third wave. Hope there won't be any fourth wave. But still the freight are going higher and higher. The container what we used to pay $2,500 for 40 feet high cube. Now today they are asking $12,000.
5x. Okay.
Thank you.
So just want to understand what is the normalized cost of production there and ours. So basically ours is around. So is the wood cheaper there, or what is the overall benefit that they have over India cost of production? Because machinery, so they might be using the same.
2 years before cost of production and everything, when the freight cost is normal, even though all the company is making 20% plus EBITDA.
EBITDA, correct. Okay. Got it, sir. Thank you very much, sir. Thank you.
Thank you. The next question is from the line of Devang Patel from NAFA AMC. Please go ahead.
Hi, sir. On the plant maintenance that we undertook for the Karnataka plant, will it have any benefit in terms of capacity utilization or efficiency gains or cost cuts?
Hi there. Yes, we believe the efficiency will definitely improve because, this was a preventive as well as routine maintenance which was needed. And we believe it will improve our efficiency.
So what kind of utilization have we reached on this plant in the past, and what is it that we can reach now after the maintenance?
Actually, every 10 year to 12 year we have to do this type of maintenance, and it will be improve the production utilization. So before that we are utilizing at 75%, and we can utilize now at 95%, 85% like that.
Okay, fine, sir. That's all from my side.
Thank you. The next question is from the line of Ajay Surya from Miraki Investment. Please go ahead.
Congratulations for a decent set of numbers. As I was listening to Green Panel's Concall, they mentioned the MDF realization difference is only 3-4% between them and Rushil. But if we look at our realization, the difference is somewhat around 13%. So I wanted to know what is the reason for the same.
Let me tell you something, because they may be referring about the price gap.
Yeah.
And as I said earlier that we give the 3 price revision, one in October, another one on 9th October, third one on 13th November. Okay. So we anticipate this price increase effect somewhere in this quarter, number one. Number two, because our value addition mix and green value addition mix is different, and that's one of the reasons why you see the difference.
Okay.
As I said that now we are targeting very seriously on value-added products. I think you must have heard whatever I said in previous.
Yeah.
So we are taking it to the new level.
Okay. And other question is, so sir, as we can see, the supply chain disruptions are easing off right now. So what are the import threats of MDF we can face in the coming future?
Sorry, what are the
import threats we can face in the coming future of MDF?
To be honest, I don't know about the future, but today I can say that Vietnam is offering 20-feet containers around 2,000 plus and 40-feet 3,000 plus. So, per CBM cost is coming around $100 per CBM. And if we consider the selling price, it's around $250.
Okay.
So it's not actually viable to import, and a lot of importers, they have shifted to local suppliers because now, supply from local business is also very easy. Now, previously, if you look at it current position, I think more than 1.5 million capacities in the north region.
Okay.
And if we consider the southern region, we are around 7 to 8 lakh per year.
Okay.
So, we are easily able to cater this market, and we have a very good, logistic advantage. Maybe we can save 10-15% if you want to bring MDF from north. And if you want to buy MDF from south, you can save around 10-15% logistic cost.
Okay. Got it, sir.
Thank you.
That's it from my side.
Thank you.
Thank you. The next question is from the line of Vijay Sarda from VL Investment. Please go ahead.
Sir, my last question regarding when we need to look out for the capacity expansion. As you said, we are already operating at 80% capacity in Andhra plant. You said we can easily ramp up to 110, 115. So given the demand outlook of 15 to 20% kind of growth, next 2 years down the line, we may need the capacity. And as you said, if we need to set up the plant, we need to plan in advance. At least it will take at least 18 to 24 months. So what is the scenario? So when we need to actually revisit the expansion plan, and if we now then looking at expansion plan, do we need to raise some money at that point of time?
Actually, till today we are behind the utilization capacity of AP plant and modification of Chikmagalur plant. So now we are utilizing the capacity and getting the expected result. So we will discuss and internal and will inform once it finalize.
Okay, sir. Okay, fine. Thank you, sir.
Thank you. The next question is from the line of Karan Batelia from Asian Market Securities. Please go ahead.
Nice. Thank you for the opportunity and congrats for a good set of numbers. So just wanted to understand the realization gap between the value-added products that we manufacture as a Chikmagalur and the plain vanilla interior gate products.
Fine, sir. If we talk about pre-laminated MDF, average realization is between 35,000 to 40,000. If we talk about exterior grade, the average realization is 30 to 35% more. If we consider HDF, WR, that is water resistance high density product, then the average realization is 50 to 60% more than the interior grade.
Right. And now that we are looking to introduce the value-added portfolio at the Andhra plant, have you spent incremental capex there, or how does it happen? Because it's almost 1 year that the plant has got operational.
And as I said earlier, we were focusing more on our efficiency and capacity achievement. So, the best option is to produce the interior grade. And
Right.
now we will enter into, because as I said, we have almost 25% of our existing capacity for the prelim machinery is there. So we can easily achieve 25% of our existing capacity for the pre-lamination grade. This is for me. Second thing, for HDF and for the exterior grade, you really don't need any specific rocket science. It's just matter of recipe. So there is no changes required for machinery or anything.
Got it. And one more thing on the competition part, for next 2 years, we see a clear case of 60% increase in the industry level capacity. So what is your sense in terms of competitive intensity, post FY25?
No, we really see that this industry is growing between 15 to 20%, number one. Number two, everyone has a different advantage and USP. We are in southern region, we have our own USP and advantages. So we really don't see this capacity will be addition of capacity will be a problem. Today, if we see, it's around 2.3 million capacity, I believe. And if we see the demand, it's between 1.7 to 1.9 million. So, and if you look at all the organized players, their capacity is almost more than 90%.
Right.
So the problem is with the unorganized player and their capacity utilizations.
Got that.
And second thing, this introduction of the product is already on the finished stage. If we talk about the product life cycle, now it is reaching to some kind of a growth and maturity part.
Right.
So in these situations, customers will be more of a quality conscious. And when you have a perfect, combination to produce the best quality of material, I'm sure that you will have your own market share.
Got it. Thank you, sir. Thank you for the detailed answer.
Thank you, sir.
I'll follow up in the queue.
So, Karan, any questions?
No.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to Mr. Karan Batelia for closing comments. Over to you, sir.
Rushil Decor team, any closing comments you want to make?
Just a minute.
Okay. Thank you. I thank you and entire team of Rushil Decor for untiring efforts, hard work, sincerity, and high dedication. I also appreciate all of you for participating in this conference call. To get, if you have any questions, please in touch with our investor relation team. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Asian Market Securities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.